Good morning. It is Michael and Emil, and it is the day after the latest Bank of Canada announcement for January 2024.
Yep,
And
first one
you're
of the
here
year.
with Michael Dominicetti with Keller Williams Realty and Emil Jelnick with Mortgage Alliance.
Hey, everyone.
Hello, hello. So it's interesting because we were going to do this video yesterday when the announcement happened, and life kind of gets in the way sometimes. So we're doing it the day after. And I'm kind of glad that we are because, if we did the video yesterday, it would be, hey, the Bank of Canada held the rate for the sixth time in a row. And it's interesting doing this today because now we have 24 hours behind us, and to see the reactions of people and banks and things like that after the announcement, I find actually kind of more interesting than the announcement itself.
For sure, for sure. I think that, mostly people were expecting that, that there was not going to be a change, right? But there was also, the inflation numbers that came out, a little while ago were sort of different than what people, maybe expected, right? So I think there was still a bit of uncertainty on, what exactly are they going to do and what's sort of going to be their tone, not even exactly what they're going to do, but what is going to be their tone for, for moving forward, this year. So, so it was interesting to see that. So I think there's, even though it was expected, I think there's definitely some relief that, that things do seem to be heading in the right direction. So inflation did go up from 3.1 to 3.4, in December, which is kind of going the wrong way, but overall we're still tracking in the right direction. So the Bank of Canada is still, on that trajectory that, from what it seems, while nobody has a crystal ball, it certainly does seem like, we sort of hit that peak, and it's more a matter of, when are rates going to come down, or how long are these rates, these higher rates going to hold, as opposed to, are there going to be any more rate increases, which is good. So I think, what I've sort of seen on my end is a bit of relief.
Yeah, I would agree with that. To me, what it feels like is, you go to the airport and you see there's dozens of airplanes that have left the hangar and they're waiting to taxi on the runway. For a visual, for me, that's kind of what it feels like right now, where, we've been in this holding pattern for quite a long time as they've been holding rates and very closely watching what is happening with other key indicators, such as the unemployment rates, vacancies for rentals, and, all those kinds of other secondary and tertiary factors that impact, our day-to-day living and the inflation. And they've been kind of waiting to see how all that's going to shake out. And I feel like we're getting really, really close to them saying, okay, we're at a point now where we feel confident that we can start adjusting the rates a little bit and not screw things up too badly again.
Yeah, I would agree with that. I think they're very, very close to that. Whether that's going to be at the next announcement or not, I don't know. Could end up being a little bit later in the year, but it is coming and it is getting closer. And I think that, like I said, I've sort of seen more confidence, and I think what we're going to see even more is that, all these people that have been sitting on the bench, sort of biding their time, wanting to do something, whether that's, sell or move, buy, right? I think they're going to start getting off the bench and getting back into the market. So it's, I think we're right around the corner from that.
And we talked a little bit about this last time, where in the last 5, 6, 7 years in Ontario, where we do our work mostly, the bulk of the people buying homes have been first-time buyers. And with the interest rates doing what they did, it has sidelined quite a few first-time buyers from jumping into the market. So what's been happening is there's this demand that is building because these people haven't abandoned the idea of homeownership. They've just put it aside for a little while because they're waiting to see what's going to happen with the rates and the prices.
Yeah, for sure.
I think,
and we've already seen fixed rates come down from what they were, 3 months ago. So it's
Mhm.
already starting to help with that qualification process for, for everybody really, right? But definitely, those first time home buyers that are just trying to get into the market. And
Mhm.
some of those ones that have been sitting on the sidelines, they may have been building some more down payment to help them with qualifying, or figuring out, maybe a co-signer or something like that. Like we're certainly seeing quite a bit of that as well. People
Yeah.
buying together, family members coming in.
Yeah. And I
Yeah,
think we're going to start seeing more people coming back to the market even before we see rate changes.
yeah,
Some of the conversations that I'm having with other agents, they're having heightened conversations with their buyers, and they're like, okay, we're past Christmas, we know the rates are going to change, we're working on a strategy where we can buy in the next like 30, 60 days, close in the next 60 to 90 days, and come up with an overall master plan for the next year or two as far as our mortgage and the house we buy, and how do we
yeah,
maximize the return on that.
yeah, absolutely. No, I
Yeah.
definitely agree with you. How are you seeing the market now, Michael? Are you seeing more activity already, or is it?
Yeah, absolutely. So it was very funny. Leading up until Christmas, things were quite slow that last couple of weeks right before Christmas, which is
Yeah,
very natural for the real estate market to be slow at that time.
everybody's thinking
And
about Christmas. Santa Claus
yeah,
is coming.
exactly. People are, going to holiday parties and
Yeah,
Christmas
that's
shopping and
exactly.
all that kind of thing. Very interesting. This year, literally on Boxing Day, I started getting emails and phone calls and messages, people saying, hey, like, we were interested about this house. Can you help us out? I was like, usually this doesn't start until early January, but literally the day after Christmas, I started getting those messages. So I feel like people are starting to think about it more.
Yeah,
They're
yeah,
slower to act than they have in the past, where, prior it would have been, mid January, end of January, and they're like, okay, here's 5 houses, let's go look at them tomorrow. Now it's, hey, we're interested in doing this. How do we start putting all this together? What do you think about this? So there's a lot more legwork involved in getting people to the point where they feel confident and comfortable to make that decision over prior years, but they're
hmm
starting earlier, which is nice.
yeah,
And
which is good.
it is good. And as far as numbers are concerned, if we look at, again, what's happening in Burlington, because it's a good size city with about 200,000 people there,
hmm
and there's currently just under 300 houses listed for sale in Burlington. And in the last 30 days, there was 101 sales. So
Wow,
basically, if no new houses come on the market as of today, we would be at zero inventory in 3 weeks,
in three
which
weeks, right? Yeah.
is telling us we have still quite a few active buyers with the capacity to buy and not enough housing available to meet a demand that's that
Mm.
high.
So, what do
So
you think is going to get sellers off the bench and get some more inventory on the market?
when they see prices going up,
Yeah.
right? Well, and I think that there's two factors involved there. So I think it really depends on the seller and the area and the house, because for the people that are the baby boomers that are looking to downsize and get out of their 4 bedroom, 2 story, 2 car garage house
Yeah.
and move into like a condo or, a little bungalow townhouse kind of thing,
Yeah.
they want to maximize the return on their investment. So when they see
Right.
that they can buy at a price that makes sense and sell at maybe a little bit higher of a price, then they'll make their move.
Gotcha.
And
Gotcha. Yeah. Okay. That's interesting. And
mhm,
I feel like that is coming, right? I feel like I feel like
I
we're turning
agree.
the corner and we are gonna see more people coming out. So
Yeah, I
yeah.
get my fear with all of this is the more that people are held back to making that buying decision, the bigger the pool of buyers we're going to have when the floodgates open. And my caution to people that are out there considering making a move in the next like 3, 6 months,
Yeah.
I would be jumping in earlier than waiting for things to change, because I mean, it's just very simple supply and demand economics where
Yeah.
if, let's say today there's 100 buyers and you can go out there and buy a house with a little competition, and you wait until the Bank of Canada starts making downward announcements, that could go easily from 100 buyers to 500 buyers, which
Right.
means the inventory is going to get gobbled up. You're going to have more people to compete with. What happens to prices?
More competition, right?
More competition means higher
Multiple
prices.
offers, no conditions.
No conditions, harder to buy a house, upsetting your mortgage broker because it's not conditional on financing. So let's not do that.
Yeah, we don't want that. Come on.
No, we don't want that. So yeah, I'm really encouraging people that are thinking about making a move and have the capacity to do so now. Seriously, ramp up your search and get out there now.
Yeah, that makes sense. That definitely makes sense.
Mm-hmm. So what do you see happening in the next couple of months as far as like mortgage rates and the financing side of things for people that are considering making a move this year?
Yeah, it's so I think that over the next couple of months it's gonna stay fairly steady. Like we're not gonna see, like I think we're not gonna see the variable rates come down. So that's, the announcement that we heard yesterday, that'll affects the variable rates, not necessarily the fixed rates. So I think that those are going to stay steady. What the quote unquote experts are saying is that, likely April is going to be when they make their first move to decrease that. Mm-hmm. Again, there's a lot of time between now and April, so so anything can change. But that's sort of when we're going to see variable rates, I think, start to come down. The overall, again, just predictions and take it with a grain of salt, is that over the next 2 years, there's going to be about a 2% decrease in the variable rate. That's sort of what the majority of the big bank, their big banks, their economists are saying. So that's what we're seeing over the long term. In terms of fixed rates, it is tough to say. They do fluctuate daily. We've already seen a drop, like I said, over the last couple of months. We've seen the indicators sort of level off over the last couple of weeks. They increased a little bit, but fixed rates haven't really been affected. But the indicators are sort of leveling off. So it's we always keep an eye on it, but right now it's seeming like things are sort of staying steady. So we'll see, sort of see where things go. But that's kind of what my expectation is, that fixed rates are going to sort of stay steady until we start seeing those variable rates come down, and then I think we'll see the fixed rates drop even more. Just my opinion. I am by no means an economist. Caveat.
And even the economists don't have a crystal ball that works very well most of the time. So
yeah, that's it, right? Yeah, I remember back, doing presentations, 2 years ago, looking at what the experts were doing, and they're nowhere near what what actually happened, right? So that's just the reality of it, right? We've got to make decisions based on the information that we have today, with taking those future predictions for, like I said, a grain of salt. So.
And here's one of the things that I try to help people understand when they're looking at buying a home or whatever they're doing inside the real estate world, is to work with somebody like Emil who can look at a couple of different scenarios and show you, okay, this is where we are today based on what your goals are. Are you living in this house for the next 30 years? Is this a transition house where you're going to be here for a couple of years and then you're going to upsize your house or downsize your house or whatever your situation is? Sitting down with somebody,
your house and buy another one. I love that one.
There you go. Now you're talking my language. But whatever your situation is, it's about sitting down with somebody like Emil who can help you come up with an overall plan and understand a couple of different directions that this can go for you. And, this is what, working with a professional means, is not just saying, hey, like, can you give me the best rate because I want to pay the least amount monthly as possible. I mean, that's kind of nice to keep your expenses in check. However, I think what you need is somebody who can look at that long-term vision that you have and help you get there. Because, whether you go with a fixed or a variable, or, you add a home equity line of credit to your mortgage and all those kinds of questions, it's all about what your goals are.
Yeah, absolutely. Right. And everybody is a little bit different. And, you really should be working with somebody that can work with you and run all those numbers for you. never hesitate to ask for different scenarios, right? Ask your mortgage broker to run different scenarios. Like, what if I did this? What if the rate was this? What if, what if this happens? And one of the biggest things that a lot of people don't pay enough attention to at the beginning is, penalties to break your mortgage, right? Because in life happens, right? And we can't always predict for that, for things happening. And so if I have to break my mortgage, what does that look like, right? Fixed versus variable are completely different scenarios, when it comes to the penalties to break your mortgage. So it's definitely something that, even though you might not expect it, it's something that you need to consider when you're getting your mortgage up front. So it's definitely need to know those things before you make a decision.
Yeah, and I think the idea of doing a little bit of future pacing as well to say, okay, this is where we are today, and we're going to be okay in this position for a year or two. However, what's going to happen 2, 3, 5 years down the road, and how do we make a decision today that is going to set us up really well 3, 5 years down the road?
Yeah.
And to me, when you work with somebody who is a mortgage professional that does this day in and day out, they can look at your scenario and say, okay, this is where we are, and this is where you're looking to go 3 to 5 years from now. So let's consider this as an option, because it might be not as simple today. However, it's going to set you up down the road.
Yeah. That's exactly it. That's exactly it.
So there you go.
Never hesitate to ask those questions.
Exactly.
Right.
And I think that's the thing about working with somebody like Emil that I love is he'll take the time to answer those questions and run those scenarios and help you understand not just, what's good for today, but what is going to set you up for success 3, 5, 7, 10 years down the road. So definitely want to be calling a mortgage professional that understands how to do that and figure out what's best for you.
Yeah, exactly. Want somebody that's going to be willing to work with you and run all those different scenarios. That's for sure.
Mm-hmm.
Yeah.
So in summary, we're basically where we are last week as far as rates are concerned for the most part.
Yep. Nothing changed.
Nothing changed. So then the next announcement is in approximately 60 to 70 days.
Yeah, March 6th is the next date, and then the one following that will be April 10th.
Yeah, so we're about 45-ish days from the next announcement, and then another 30 days to the April announcement, which I think everybody is saying that's when we expect to see a change.
That's what it seems like.
Yeah, so you got 2 more months. Just hold on for 2 more months.
That's right.
All right, so if people are looking to get a hold of you, Emil, what's the best way for people to reach out to you?
The best way is by email. So it's Emil, AMIEL, at jelinikmortgages.ca.
Yep, we'll provide all of the details to get a hold of Emil. So if you have questions, reach out to him. I'm Michael Dominichetti with Keller Williams and servicing the Southern Ontario, specifically the Greater Hamilton area. And something that I just want to put out there is I have a realtor network that spans pretty much all of North America. So even if you're looking to buy a home, sell a home, or invest in, say, Edmonton or Halifax, or even down in the States too, let me know, because chances are good I have connections to really fantastic agents in those spaces. So it's not just the area that I cover, but it's the people that I'm connected to as well that we can help you with your real estate needs. So reach out. Awesome. I'm super easy to find. Believe it or not, I'm not the only Michael Dominichetti in the world. There's another one who's a police officer in New York State. So that is not me.
Okay, don't confuse that.
Yeah.
Don't confuse Michael Dominichetti, realtor, with the police officer.
You can find me. MD Real Estate Group is my handle across social channels. And you can look up our website, MD Real Estate Group, and connect through there. And we're happy to help you with your real estate needs anytime.
Awesome. Thank you, Michael, for having me on. I appreciate it.
Have a most wonderful day, Emil. We'll chat soon.
You too.